Hey everybody, it is Mattie here with Altcoin Buzz with you on this Sunday, and today is all about perspective. We're going to be talking about Bitcoin, about scarcity, about the upcoming halving next year in 2020. We'll take a look at one popular analyst's tweet on the subject. We'll also take a look on medium.com at modeling Bitcoin's value with scarcity. What does scarcity really mean in the context of a cryptocurrency? Yes, it's a commodity arguably, but it's not exactly akin to the traditional golds and silvers of the world. In other words, it's not a physical commodity, of course. It's certainly been likened to precious metals, but we'll take a look at that, a very interesting perspective here on news.bitcoin.com. We'll take a look at the new Bitcoin banks, which are here. Forbes is covering Bitcoin again, calling it the new gold and talking about a trade war that is the extrapolation of that fact. And finally, here on the nextweb.com, Satoshi Nakaboto, Hal Finney calculated a Bitcoin price of $10 million per coin. You may have seen that figure being thrown around recently. Let's begin with a snapshot, however, of the market. Things are up a little bit since yesterday's recording, sitting at 269 billion total market cap. That's up 2.3% over the last 24 hours. Bitcoin back up over $10,000, albeit modestly at $10,100. Make that $10,081. Live update here at the time of this recording, up 1.2% on the day. Okay, and to set the stage here with some context, we have Plan B on Twitter at 100 trillion USD. Bitcoin halving chart update, 9 months to go with a snapshot of the last couple of halvings. So 2012 halving with T minus 9 months, Bitcoin at $5. And then at the halving, it was $12. So that's over a 100% increase. 2016 halving, T minus 9 months, Bitcoin at $314. And then Bitcoin at the time of halving, $627. So just about a doubling there. 2020 halving, of course, T minus 9 months, we're at about $10,100. What are your thoughts about where Bitcoin is going to be at the time of the halving in 2020? Leave us with your comments below. Is this the kind of pattern that has played itself out? Is it still applicable with the next halving coming up in 2020? Must history repeat itself, or maybe are we going to see a new kind of pattern? Let us know, but it is encouraging to note what has happened the last couple of times this has taken place. Now looking here on medium.com, modeling Bitcoin's value with scarcity. So Satoshi Nakamoto published his famous white paper, of course, on Halloween of 2008 and created the Bitcoin Genesis block in January of 2009 and released the code on the 8th of January 2009. That's all exposition, and you guys know that, but the idea, of course, was to create something akin to a scarce metal such as gold, but with the following properties. Boring gray in color, not a good conductor of electricity, not particularly strong, not useful for any particular ornamental purpose, and one special magical property, of course, can be transported over a communications channel. That's a quote by Mr. or Mrs. Nakamoto. And with the tech out of the way, really the next most important quality was what Nick Szabo referred to unforgeable costliness. In other words, his definition of scarcity. So here's an interesting quote. What do antiques, time, and gold have in common? Well, they are costly due to either their original cost or the improbability of their history, and it is difficult to spoof this costliness. There are some problems involved with implementing unforgeable costliness on a computer. If such problems can be overcome, we can achieve bit gold. And Bitcoin, of course, does have that unforgeable costliness because it costs a lot of electricity, as you know, to produce new Bitcoins. Producing Bitcoins cannot be easily faked. Note that this is different from fiat money and also from altcoins that have no supply cap and don't necessarily have proof of work, maybe have low hash rate or have a small group of people or companies that can easily influence the supply, etc. Saifedean Ammous talks about scarcity in terms of stock to flow or SF ratio. He explains why gold and Bitcoin are different from consumable commodities like copper, zinc, nickel, brass because they have high SF. Quote, for any consumable commodity, doubling of output will dwarf any existing stockpiles, bringing the price crashing down and hurting the holders. For gold, a price spike that causes a doubling of annual production will be insignificant, increasing stockpiles by 3% rather than 1.5%. It is this consistently low rate of supply of gold that is the fundamental reason it has maintained its monetary role throughout human history, and the high stock to flow ratio of gold makes it the commodity with the lowest price elasticity of supply. Now, the existing stockpiles of Bitcoin in 2017 were around 25 times larger than the new coins produced in 2017. This is still less than half of the ratio for gold, but around the year 2022, Bitcoin's SF ratio will overtake that of gold. And if you're more quantitatively inclined, you can take a look at the formula here and take a glance at how you can calculate SF, or stock to flow ratio. The rest of the article goes on to really explore the nature of scarcity. And of course, that loosely ties into, I wouldn't call them necessarily economic laws, or their laws perhaps insofar as economics has laws, arguably, because nothing is 100% predictable. It's not exactly the hardest science in the world, at least in my opinion, but the exploration of scarcity, what it means psychologically speaking, and that includes collective public psychology. It's a very interesting piece here, so we would encourage you to check it out. Let's close on this. People ask me where all the money needed for 1 trillion Bitcoin market value would come from. My answer: silver, gold, countries with negative interest rates such as Europe, Japan, and the US, soon, arguably, countries with predatory governments, Venezuela, China, Iran, Turkey, billionaires and millionaires hedging against quantitative easing, and institutional investors discovering the best performing asset of the last 10 years. Take a read, guys. We'll link to this in the description below, and of course, let us know your comments on the piece. And looking quickly at this article on news.bitcoin.com, the new Bitcoin banks are here. A new age of banking is imminent. Legacy models will be forced to follow suit or become obsolete in the eyes of value holders worldwide, as new Bitcoin and crypto services take over, seeking to implement blockchain systems with an eye on convenience and financial inclusion. Announcements of stablecoins and exchange services from giants Binance, Coinbase, and others signal that the age of the Bitcoin bank is just beginning. Whether this shift brings about the immense positive change it promises or simply becomes a new centrally regulated banking system with a competing digital monies, the transition is nevertheless underway. Loosely speaking, this article goes on to describe the macro trends that are happening across the world with not only some of the banks, but some of the exchanges that are offering banking solutions and banking products, as well as some of the investment houses that are making more and more forays into cryptocurrency. We've talked at length, of course, about institutions like Fidelity, and they're certainly not the only one, but we're seeing more and more of an overlap, of course, between the world of traditional finance, traditional banking, and the new world of Bitcoin and cryptocurrency. So check out the article in full, but it talks about, of course, Binance and their announcement about new stablecoins project, about Coinbase's acquisition of Zappo, of Huobi Global, which is making huge strides and implementing some extremely airtight measures such as 24/7 security monitoring and a, quote, dedicated 20,000 Bitcoin security reserve fund. So extremely professional in terms of their undertakings. This article also describes CoinCheck and Bitcoin Suisse, as well as Bitcoin.com. So a new era of banking is emerging. Check it out in full and let us know your thoughts about that in the comments below. Here now on Forbes.com, Bitcoin is the new gold, trade war. So in the context of the geopolitics that are currently swirling around the world, China announced tariffs on the US in retaliation for American tariffs, and like clockwork, President Trump has tweeted that a terrible retribution will be served. You may or may not have been following the reactions in the markets, but this article asks, what about Bitcoin? Well, let's have a look. Bitcoin leads gold and outperforms on Trump trade war escalation. And in fact, in response to the news, gold is slower and lower than Bitcoin in terms of its reaction. And as you can see here, the US market, in stark contrast to the moves being made by Bitcoin, has slumped pretty noticeably. Bitcoin outperforms gold by a mile and leads both gold and 500 points of Dow action. Skipping ahead, the point is, however, that Bitcoin is replacing gold as the safe harbor asset, and that is a role that is only going to grow. And while there is only 200 billion or so of it, it must fly higher than $5 trillion gold and its entourage of paper proxies. Bitcoin is the new gold, but what is good for Bitcoin is good for gold also. So the PGM fan needs not despair, because the main thing that will be driving them both is sat in the White House for at least another year or so, and with, quote, luck, will still be there for a few more years on top. That's a bit of an op-ed there, not necessarily my opinion, not necessarily against my opinion, but there you have it. Let us know your thoughts about that in the description below. Forbes likening Bitcoin to gold. All right, I like it. Very nice. And I tell you what, we were supposed to cover this piece as well on thenextweb.com, but in truth, to do it justice, it's a little bit denser. We're already running a little bit long, so let's come back to this one on the subject of $10 million Bitcoins, and we'll have a look at that the next chance we get in our next news video, because I think that about rounds it out for today, everybody. So do be sure you are following us on all the regular social media channels. Keep checking back into altcoinbuzz.io. Go ahead, like, subscribe, share, hit the bell to receive notifications if you enjoyed this video. Best of luck, of course, if you choose to invest on this Sunday. Hope you have a great tail end to your weekends, though. And as always, we hope to see you again soon in our next video. Take care.